Looking for a pullback. Your trading actions sort of followed your words. Does that still reflect where you are?
Yes, sir. And it's not because I don't see the same things as Jenny or Mike or Joe. I do. I see a lot of good things out there, Scott. But because of where we are, in particular with the VIX, and that trade that you just detailed from Goldman Sachs, which is basically the other way to play the VIX, is with an S&P put spread rather than buying calls in the VIX. I think that it behooves us not to be in stocks right now, but to be in call spreads and or protective put spreads, because you're setting a limit to how much risk you're taking on. When you buy calls, or rather when you buy stock, you have the whole downside of the company when you buy that. So when I'm bulled up, that's when I'm more in stocks and I'm selling calls. Right now, premiums are cheap. They've been the cheapest we've seen in over a year. And for that reason, I want to be in those calls, Scott. And so to answer your question directly, yes, I'm still cautious, even though I cited that good news out of Europe that I hope spreads from Germany to the rest of the continent, that we start seeing those vaccinations pick up. And if we do, that's, again, part of the global cycle. Instead of just the U.S. Being the baton leader, we can have some other people carrying some of that as well.
The headline from you then is going to be, it behooves us not to be in stocks right now, that you would rather be hedged through options.
Yes, sir. Yes, sir. 100%, Scott.
All right. So, Jenny, why don't you take that on? It behooves us not to be in stocks right now.
Right. I obviously disagree, but John and I manage portfolios very differently, and that's important. When we use the word euphoria before, I want to be careful with not applying that to the whole market. And we need to remember that throughout the past couple of years, there's pockets of euphoria. If there's pockets of euphoria, then there's also pockets of opportunity. So the objective is to avoid the pockets of euphoria and find the pockets of opportunity. In my case, because I manage a value-leaning portfolio, there's tons of pockets of opportunity. So I'm not looking at the FANG stocks, which currently are trading at a multiple of about 39 times forward earnings. To me, that's a euphoric. There's too much there. When we talk about risk assets and that they're going to pause or come down, I think that those are in that camp.
Wow.
I think when Michael said you need to be very particular right now, right? Maybe they plateau, maybe they come down. Who knows?
But you're telling me
that's where
you
the
think
most
the FANG stocks are exhibiting euphoria? I mean, I can understand if you cited some other parts of the tech spectrum, but the FANG stocks are way overvalued?
They still make, do you know they still make up almost 24% of the S&P 500? That's huge. And if you look at any historical time period where the top 5 stocks have made up that much, and you look at the following 10 years, they either plateau and or trickle down. So to me, that's kind of euphoric, since they're holding on to that nearly 25% weighting in the S&P 500. That's not where I want to be. Sure, there are areas with way more euphoria in them, like the SPAC market. That's not where I want to be. There's a lot more out there that you can do that's cheaper.